Remember the Asian tigers? China has dominated the thoughts of most investors interested in the Asian region. Yet with real GDP growth of 8.5% and export growth of 17%, Vietnam is emerging as a potential next big thing. While India struggles to build crucial infrastructure and China nearing its peak, Sky News Business Channel reporter Kai Chau spoke to Lawrence Nguyen from Vietnam emerging capital and asked what was it that was spurring Asia's youngest tiger economy along.
The current drivers are basically the increase in foreign direct investment and also just overseas Vietnamese and internal domestic growth that's been driving the economy to a boom, both in the property and the share market.
Why would an investor be looking at Vietnam as opposed to China?
Vietnam is starting from a low base, so in terms of the growth cycle, they will have a longer growth cycle span, and it makes sense for an investor to invest in a lower base with a longer cycle of expansion and growth. And hence that will justify the returns, and it's actually a good value at the moment with the Vietnamese economy and pricing to be invested in Vietnam rather than China, which is probably a bit saturated plus overly priced in some aspects of manufacturing and investments.
What's the situation with corporate governance transparency in Vietnam? I mean, how are Australian investors, for example, going to know what's going on with their investments over there?
The local government recognises the opportunity for foreign direct investments to come in to build the country, as well as local companies realising that they need foreign expertise and also monetary stimulus to build the companies that they recognise they need to step up in terms of a business playing field and a transparent playing field where it's easier to encourage these investments coming into the country.
The risk of suddenly changing legislation is an issue with a lot of developing countries, including China. Is this an issue in Vietnam as well?
What we've, I guess, analysed and researched about was the movements towards change, and it hasn't been there has been sporadic in terms of government changes and legislative changes. So we're comfortable in moving forward in investing in Vietnam in that way.
You say the Vietnamese government is fairly amenable to foreign investment, in fact encourages it, yet still only there's a 30% cap, isn't there, on most of the state-owned enterprises in terms of foreign ownership? I mean, does that really send the message of welcome to foreign investors?
It's always, I guess, for a lot of the state-owned companies, it's always been a procedural thing where they sell off a bit at a time. One, to control the market, and to, I guess, to stabilise a lot of the demand-supply issues and not become overheated. From what the country's been tracking, actually that has increased in the past few years with percentage holdings of foreign companies. They've actually, some companies, listed companies, have increased from 30 to 49%, and the trend is upwards in terms of foreign ownership. With and there has been 100% holdings of certain bigger companies. So it's a process of steps there.
Lawrence, thanks for your time.
Thank you, Kai. Thank you.
Stay with us after the break. A new style of banking as the West tries to take on the dominance of the Big Four in the East.